Good evening, everybody. It's Wednesday, June the 15th, and it was a big day with the Fed interest rate decision we've all been waiting for. So let's get started. I'm your wealth guy. Let's talk money. Let's talk market wrap up. All right, everybody. So, first things first, welcome to the channel. I hope you like what we have to say today. If you do, please don't hesitate. Hit that like button, subscribe, and most importantly, comment. I really want to know what you have to say about the markets and your thoughts on today's interest rate. But let's talk about it because today, the big day, we got the decision 0.75% interest. We are fighting inflation. The Fed likes to tell us they are fighting it. Today they are they have a determined resolve and flexibility to act. Well, a 75 basis point or 0.75% increase to the interest rate, even multiple times this year, isn't really going to do too much. Let's be honest here. It's not going to curb inflation whatsoever. And there's an additional reason as to why. So not only do we know as long as the interest rate doesn't meet or exceed inflation, the European Central Bank today came up with new tools to curb or control fragmentation of the debt market. Now, really, let's look at what that means. So fragmentation is really implosion. New tools is really money printing. So I got it. They are going to print more money to buy assets to curb inflation. That's how it works, right? The funny thing is, I think the Fed is going to do the same thing. I mean, they only have so many tools as central banks that they can use. It's either interest or money printing, buying and selling of assets, or raising or lowering interest rates. But let's jump back to the Fed and the markets today, because the markets actually reacted quite well, initially pulling back slightly before listening to Powell speak about the view of the Fed and the FOMC in regards to the markets going forward, the economy, and a lot of what they had to say was not so hawkish. I wouldn't say it was dovish either. We did get the sense that they're aware of the fact that the economy is in absolute free fall, although they did try to spin it a few times saying, the employment is at near lowest it's ever been, and there's plenty of available jobs out there. Funny enough, initial jobless claims continue to drop. Retail numbers or retail sales we saw today, still not great. GDP shrank, PPI shrank, or PPI actually increased, so we've got an additional inflation there at the level of the producer. Mortgage rates are increasing, housing market slowing down, which they acknowledged. But the economy is great. I have no words. But I will say this. The market did react quite well, which is actually shocking because the NASDAQ actually reacted from a percentage basis even better. And the NASDAQ is very leveraged in terms of the companies that are there. So to see an interest rate hike and then the NASDAQ move to the upside, a little bit weird. Not too sure I get that one, although it was probably more of a broad spread euphoria more than anything when it comes to the market. But today, another thing I want to point out is that the 10-year yield actually dropped very substantially, down 5.5%. In other words, down about 20 basis points overall, which is very, very significant. Again, the instability to the upside is just now being reflected as instability to the downside. So again, this is actually concerning. This is not necessarily a great sign. Now, it does look like we will be going back to that 3.25% yield, which is absolutely fine. I know that was a target for a lot of people. Mine was slightly higher. It was actually at between 3.3 and 3.5. But to get back down to 3.25, that's just fine. I don't think that this sell-off is done yet for yields. I think we'll probably see a few more days of yield sell-off and a little bit of purchasing here in the equities market. I do expect the equities market to continue to go to the upside. Now, if we do see that over the next 2 days, I really don't think it's going to be long-lived. I think there will be momentum. I wouldn't be surprised if we pull ourselves out of bear market, which we are currently still in, even after today's rally. What I would really pay attention to here is once the rally starts to slow down and the economic numbers start to come in and the euphoria starts to die down, inflation numbers start to come in, I think we're going to see again another reduction in the market. I'm not convinced that this selling is done. I don't think we've hit quite the bottom yet. I haven't seen the institutional money necessarily coming in, even though today I'm going to feel like a lot of the buying was done by the Fed's trading desk, regardless of whether or not they say that they do trade. I think a lot of the buying here was the Fed definitely stepping in. But that being said, over the next few days, I do anticipate the markets to continue to move to the upside. I am looking for that. I am going to be watching the 10-year yield still, because any of these insane price fluctuations from a percentage basis is actually quite concerning. Let's also keep an eye on the US dollar, because if the US dollar continues to drop like it did today, then that's a positive sign for the market as well. So let's keep an eye there. But let's take a look at the rest of the market today, because I don't want this video to drag on too long. Cryptocurrencies are still continuing to struggle. Bitcoin still around 21,000. Again, this is a volatile market for crypto, or cryptos in general, I should say. So anybody who is expecting or not expecting the markets to really drop, you really should have taken a harder look at what cryptocurrency price action is like. So as I mentioned, actually, Bitcoin is now currently at about 22 and a quarter, so it's up about 3.25% this afternoon. Ethereum still down at about 1,200. Again, I'd like to see Ethereum, like I've said in the past, at least 2,500 to really feel confident in levels there. Another area of great price movement today were actually commodities. Gold and silver did quite well today. Silver back over $21, which is a great sign. Taking a look at gold, gold was up $22.60 today, sitting at about $18.50, just shy of, to be exact. Crude today wasn't all that stellar, but did finish 8 cents in the green, is actually currently up 6 cents actually. So very flat for this post-market. However, natural gas continued to move to the upside throughout the day, is currently pretty well flat. Looking at other commodities, again, moving to the upside. Commodities, as I've mentioned over and over, are still where I'm very bullish. Commodities, energy, I'm still very bullish, partially because I'm still not convinced that the sell-off here in the equities market is done. At the same time, I do, based on taking a look at things like Russian war, supply chain issues, and if we take a look at just here in North America, policy that is causing restrictions, that are causing continued and additional supply chain issues, and then inflation on its own, especially if we're taking a look at transportation and gas costs. Again, all of that is going to translate down to the consumer level or the retail level. But again, very, very bullish commodities, in particular energy, and in particular precious metals, at least for the long term. For precious metals, more midterm for energy and crude. Agriculture, I'm very, very bullish on, and I think that'll continue to be an issue as long as we continue to have this conflict over in Europe. But again, we are a conflict-to-conflict economy and a conflict-to-conflict market. So one way or another, this market's going to move based on that alone. But that's it for tonight, everybody. I want to see what you guys have to say. Feel free to comment down below. Again, we're watching for continued price action to the upside in the market. I do think we're probably going to see a little bit. Not sure what level of volatility and how aggressive, but I do think we probably will have at least one more day if we don't finish the week in the positive. But for now, I will see you tomorrow morning at the opening bell.